Today we had a strong bounce across the board. Is the stock market gearing up to start pushing higher? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today SPY was up 1.05%, and I did make a video on Friday saying how that pullback was likely going to end up being a bear trap, and I gave all of the objective reasoning based on all of the charts I looked at on Friday of why I thought that pullback was going to end up being a bear trap that would resolve into a very powerful bounce. And as you can tell from today's price action, we did get a very strong bounce across the board. So if you want to see how I figured that out, go watch Friday's video and pay attention to all of the details that I went over step by step by looking at the indices. All right, so now that we got the bounce from that support at 430, we are now sitting at resistance yet again, which is this level right around 437, which is the daily 50 EMA and just below the gap fill at 438. So if you wanted to be very conservative in order to get bullish from here, you would want to see a break of this resistance, but it's likely going to happen very quickly. So it is still going to be a very simple trade plan of this range between 430 and about 437. And once we break out of this range, we are likely getting the next leg in this market. Now, keep in mind, there is the possibility this was all a correction within the bull market of 2023, which means from here, we are going to continue to put higher lows and higher highs. And if we are going to do that, I would like to see SPY hold this support at 430. So I think that is a very good risk level for long trades and all of you bulls that want to stay long in this market. However, if we break down below SPY 430, price action will be below all of the moving averages, and that will look very bearish. So I highly suggest managing your risk at SPY 430 if you're bullish. And if you're bearish and you want to try to short this market, you simply need to get risk off if we start to break above 437 and stop trying to short the market, because that's going to confirm a bull trend. And then price action is going to be above all the moving averages, and we're likely going to continue to push higher into quarter four. So as I've said many times, I thought SPY 420 was likely going to be the bottom before we start a quarter four rally towards 460. So there's really nothing on the chart that tells me I need to abandon that plan until SPY breaks down below 430. SPY below 430 is way too risky to stay long, because then we could start to get impulsive selling, but I would definitely wait until that support breaks before getting bearish. You can still take low risk short entries while we're in this range, because we may stay in this range, but once we break out of resistance, you need to get out of your short positions, and if we break down below support, you need to definitely consider also getting out of your long position. So this is going to be a very important range that we need to break. Now, if the bulls get the breakout above 437, we have that gap to fill above 438, and then we'll likely go straight towards 440 to 442. If the bears get the breakdown below 430, I'm expecting us to go all the way back down to 420, and then if we can't hold 420, we're going to go into a bear trend. On the Nasdaq 100 triple Qs, we were up 1.13% today, and the triple Qs have the price action back above all of the moving averages yet again, as they are starting to regain the bull trend. This goes hand in hand with what I said, that this was likely just a pullback within a bull trend, as long as we can break out of this resistance trend line, which is going to require the triple Qs to break that resistance between 373 and 374. Now, before we can break that resistance, we need to break this level right here at 370. And if you want to get risk off as a bull, you need to manage your risk down here right around 361 to 362. If we can't hold that support, which is right around that 20 daily moving average, we are likely coming back down to 355. And if we go back down to 355, we're likely going to break down through it and hit that next target lower at 347. So this is an important range in the triple Qs between 361 and about 373. And I do think the bulls are end up going to get the breakout. It's just a matter of when at this point, as long as we can hold above that critical support and continue to build on this bull trend that the bulls are doing a great job of maintaining. You can see the bulls have been back above that 20 daily moving average for 7 trading days now. So the bulls are still well and alive and ready to start pushing yet again. So manage your risk at these critical support levels below. And as long as we're above it, there's no reason to sell your long positions. And if you are shorting the triple Qs, you need to get out of your short trades on that break above 373 or the break of 370. On the Dow Jones, we were up 0.95% today, and the Dow Jones are looking a lot more bullish above most of these moving averages. We simply need to break one more resistance level, which is going to be right here at 341. Above 341, we break out and we go straight to fill the gap above 344. And then shortly after that, we have a test of the downtrending resistance trend line, which is going to be right around 345. So there's a very good chance the bulls are going to continue to push. It's just going to require a break of that resistance at 341. and you can stay bullish in the Dow Jones as long as we're above this support at 336. On the Russell 2000 IWM ETF, we're up 1.62% today, and I do believe this level at 170 is extremely critical because if we break below it, this is a very powerful bear trend that's going to flush down to the next target lower at 164. However, if the bulls hold 170 and can break this neckline at 176, it is going to look like a successful double bottom breakout, and then from there we should easily fill the gap at 180 and then test the downtrending resistance trend line that defines the current downtrend, which is right there at 182. So you can stay bullish above 170, but you will need to get risk off below it unless you're comfortable holding down for the drawdown to 164. If you want to get bearish, I would wait until we get closer to the resistance at 175 to 176 or that break of support at 170. On the ARKK ETF, we were up 2.01% today, and ARKK is trying to hold this support right around 38, even though on Friday we did close below it. Today we did not see follow through with the selling, so you could try to stay bullish above 38, but I would caution against it because price actions below all of the moving averages in a very powerful downtrend, and this is the definition of trying to catch a falling knife if you try to buy here at 38, so that means you need to get out on a break below 38 because we're likely going to fill the gap at 36. We can get a lot more bullish once we see higher highs and higher lows, but we simply just don't see that. On the VIX, we were down nearly 11% today, and the VIX crushed from 20 yet again, and I've been telling you that's exactly what we've been seeing this entire bull market of 2023 is spikes to the VIX of level of 20 during pullbacks and then crushing back down as we resume the bull trend. So I still don't see any different behavior in the VIX just yet. That's going to require breaking and closing above 20. On Bitcoin, we're currently up about 4%, and Bitcoin has very high volume buying, and it's trying to break that resistance at 28,000, which is way outside the upper Bollinger Band. So even though we did go as high as nearly 30,000, we couldn't hold on to it because we were just way too far overextended. Look for the bulls to try to get this close above 28,000, and if they do, we have the higher lows and higher highs that tell us the bottom is likely in, and that means the bottom was going to be 25,000. On Tesla stock, we were up 1.12% today, and Tesla does have earnings today, so make sure you're aware of that. If you're placing any high risk trades, this is not the time to do so. And as you can see, Tesla is in a very large wedge, which means earnings is likely going to be the catalyst we need to get the breakout. And when you're in a wedge, you usually want to see the price action show the next direction. You don't want to make any assumptions. I will caution you though, if we do get the breakdown after earnings and we break out of the wedge, I think there's a good chance, even if we go to these lower targets, that we're still going to get a bull run by the end of the year, which means Tesla could still finish out the year near the 290s or 300s. However, that's going to be a very painful drawdown if you're long and you have to hold all the way down towards 230 or 218. So just be aware of that is a possibility, and it could still be bullish in the longer term, but it's going to be very painful in the short term. And the reason I'm warning you about that is because Tesla did break down below that support at 255. Now, if Tesla can hold above 255 and show this is a higher low from the previous low at 240, and then break out of the wedge to the upside and break that resistance in the 270s, then it's extremely bullish and we're likely going straight to 290 and then 296. On Apple stock, we were down 0.07% today, but intraday Apple did test this support zone between 174 and 176. And as you can see, this is where I drew out the likelihood that we would get a higher low pullback before we continued higher into earnings and then go up there to close that gap right around 191. So this is a textbook pullback, and it's no reason to get bearish as long as Apple can hold this support at 174. It's only if Apple cannot hold support that it's likely bearish, and then we'll likely go down there to fill that gap at 167. So jumping back over to the S&P 500, there were plenty of warning signs on Friday that was likely going to be a bear trap. And now if we continue this bounce and we continue to push higher, the bulls are going to take over and the bears are going to have to take their losses on a break of that resistance. So just be very careful if you're shorting. We're very close to possibly getting a bull breakout, and if we do, we can start to run and push to higher prices. So make sure you're managing a risk very well, and if you're bullish, make sure you're managing a risk at that critical support because it is possible we do break below it. And you always want to be prepared for any scenario and then just let the price action do all the talking from there. When you don't have a bias and you couldn't care less if the market goes up or down, you're going to be a much better trader. So try not to focus too much on where you want the market to go. Simply take the trades the market is giving you and put yourself in the best odds with the best risk reward ratios, and you're going to do a much better job as a trader. We are absolutely crushing this market on the Stocks Channel Discord server and Bang Trade Alerts, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.